Ross McEwen foresees much slower growth as politicians continue to wrangle over Theresa May's deal and says it's already causing a dip in investment. He says negotiations are always difficult, but there's little alternative to the agreement on offer.
I have been a backer of the deal because at the moment I don't see another deal, and so from a business perspective we need certainty. And with any deal where you've negotiated hard over a long period of time, you're not going to get everything you want. There are going to be parts of that you have to give up on to get something else, and for me it's around how do we get some certainty into the marketplace, because what is starting to happen is investment is not being made.
Emmanuel Macron has vowed to face down the violent protests that have troubled France for weeks. The president told ministers that measures taken in the past 18 months, including the scrapping of a wealth tax, won't be undone. But having shown a flash of weakness in suspending a planned fuel tax hike, Macron's tough talk might not carry the same weight as before. And Washington has said goodbye to President George H.W. Bush in an emotional ceremony at the National Cathedral. The president's elder son, George W., called his father a leader of unrelenting optimism and steadfast character, saying he taught him what integrity means. President Bush was the last U.S. leader to fight in wartime. He'll be buried after a funeral service in Texas on Thursday. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg. Rish.
Let's get to this bit of news dominating headlines here at the moment, sending stocks reeling, is the arrest of Huawei CFO Meng Wanzhou provoking a storm in China just as trade negotiations with the United States enter a critical stage. The Chinese embassy in Canada has been protesting against her arrest, calling on the United States and Canada to rectify what it calls, quote, wrongdoings. Let's try and make sense of it all. Our senior international editor is Jody Schneider. She is here. Now, Wanzhou Meng, what do we know about her and what do we know so far here, Jody?
Well, she is Huawei's CFO. She's the deputy chairwoman, and importantly, she is the daughter of the founder. She was arrested over the weekend in Vancouver over potential violations of potentially violating Iran sanctions that the U.S. had imposed. The Justice Department in April had begun an investigation into whether Huawei was violating those sanctions against exports. So she apparently is. They've asked that she be extradited to the U.S. And of course, as you just noted, the Canadian embassy, the Chinese embassy there in Canada, is protesting fairly vociferously, and it has sparked a lot of outrage in China. Comes interestingly as the two countries had just established a so-called truce in their trade war, saying that they were going to take 90 days before further tariffs to look at potentially being able to come together on some of these issues. This is certainly going to complicate those talks.
Jody, thank you very much. Jody Schneider there, our senior international editor in Hong Kong, with the very latest on the Huawei story. Richard, this has obviously really rocked the markets. We saw a little bit of a pause in trading, didn't we?
We absolutely did. And, what we have is an absolute storm at the moment. It is pretty horrid out there at the moment if you're long. And our question of the day is, how concerning is today's ugly session? Let's put that question also to Hartmut Issel. He's head of Asia Pacific Equities at UBS Wealth Management. Hartmut, great talking to you. Well, that's the question, isn't it?
Yeah, I would maybe take a step back. I mean, this comes also after we had a bit of a silent but quite significant rebound already. And we have seen, especially in the Asian market, or especially also in China, the lows over a month ago. And at the time, we were really charting this, or we were very close on the valuation side to previous crisis levels. So we said, okay, stay the course, right? Even though the news flow isn't necessarily great, we don't even expect it to be that much more positive. I think today serves as a reminder, especially on the trade side. But nonetheless, when the markets find these kind of valuation supports, which is the case right now, right? So we're coming basically, we're giving some of these 10-13% gains up today. Understandable, we know why that happens, but I would really not, or would really try not to lose sight of the bigger picture, which is that especially Asia, if you look at the regions around the world on the stock markets, especially Asia seems to be very, very close to having very significant valuation support. That also counts for something, so we wouldn't be too distracted by the news today.
Yeah, and Hartmut, the thing is that I'm probably naive in saying that these evaluations are totally skewed towards, well, skewed and have nothing to do with fundamentals at the moment. And fundamentals perhaps sometimes don't actually play a part, but they do if we're going to have some sort of mean reversion.
Yes, exactly, and that's I think what we saw during November. Right? It's not, or for the most part of November, it's not necessarily that you saw a lot of lightening up on the trade side or otherwise, and yet many of these stocks, right, also bank stocks, internet stocks that really got hit hard in China, in the China market in particular, they have started to rally back. So basically, what we had done at the time, we said, okay, how far are we away from crisis level? Really, and on stable measures like book value, not just earnings. The estimates can be right or wrong. It already flashed green at us, and so basically, what I'm saying is we are in a territory where oftentimes, even though the news is perhaps bad, that the markets become a bit more resilient towards that. And I think the last 2 months they show us that we are in this kind of situation.
Hey, Hartmut, a very good morning to you. Finally, we get to speak. I've put into the GTV library the cross-asset, the torture that was 2018. By the way, Investec would completely disagree with you. They would say that actually whatever pain you have in a correction in the US market, it gets worse for Asia. Have a look at the cross-assets. Where are you hiding? What protection are you taking? Where do you hide 2019? Or do you take risk on the drop?
Now, I would highlight that we're not only hiding. So our strategy also going into 19, call it maybe a bit oversimplifying, but call it maybe earners and call it buffers. So on the earner side, as we have recently actually increased our global equity overweight, but not very region specific in that bucket. But we have about 1-2 months ago also increased the Asia ex-Japan overweight. So there are some earners, some cyclical exposures there. What oftentimes investors do not talk so much about, but actually if you go by a single position, our largest is right now in emerging market sovereign bonds. So the dollar bonds of the EM governments, which have also been beaten down also recently in the last 2-3 months, don't move that much anymore, and almost regardless how bad the news flow turns. So there's a pocket that we definitely want to exploit, almost 7% dollar yields. And last but not least on the earners, also the Asian high yield bonds. I mean, here we're talking almost about 9%. We haven't seen that in many, many years, so risk reward looks very attractive. But yes, we have the buffers, 10-year treasuries we have a long position on the Japanese yen. Yeah. And by the way, we also have a partial hedge on the S&P 500 on puts.
Can I just dig a little bit deeper into the yen? We just had Kathy Matsui with us from Goldman Sachs, and she sort of said, look, perhaps the best of the stimulus is behind us. Kuroda is on the tape this morning saying the economic risks from abroad are severe, but the Bank of Japan will take the appropriate action. Are the best days of Japan behind? I know we're down 2.25% this morning, so we're taking the rough and the tumble there. But how much Japan do you want to actually have on board in 2019?
As far as Japan is concerned in our positions, a key angle really for us is the yen, because it gives us protection, right? That usual reflex that you have when the world becomes more turbulent, the Japanese pull the money back, that strengthens the yen. But this time, and you rightly mentioned, right, the BOJ is depends on the pace, but is on its way out of this massive QE, which means you would even in a normal world expect the yen to strengthen. So that's one angle. The other angle is, yeah, for the stock market, is that great news. We don't want to take an active position, but within the stock market, of course, the one that benefits when the QE exit happens is the banks, and we have quite a number of positions there.
Hartmut, thanks a lot for that. Hartmut is still there. He is from UBS Wealth Management. Our thanks go to you. Still ahead, as Theresa May's crucial Brexit vote nears, the Chief Executive of Royal Bank of Scotland shares his fears for the UK economy.
But up next, Saudi Arabia and its allies are set to defy President Trump's call to keep the taps open. The latest on the OPEC Plus situation. That's next. This is Bloomberg. Saudi Arabia and its allies are recommending a curb on oil production, rebuffing a Twitter plea from President Trump to keep the taps open and the price falling. Meeting in Vienna, the OPEC Plus group secured Russia's backing for 6 months of reduced output from January. Although specific cuts, well, they weren't discussed. A final agreement could see 1 million barrels a day removed from the market. Meanwhile, you've got the CEO of Lukoil. Now, this is Russia's largest non-state oil-producing company, and they're hopeful there won't be the need for a large supply cut. The CEO spoke exclusively to Amory Horden.
So, as of today, the temperatures in Western Siberia, they're somewhere around -30, -40 Celsius. And as for the water cut of the fluid produced, it stays around 80 to 90%. That's where the water cut is. So as for 2017, it took about 4 to 5 months in order to meet the cuts that were set. So once again, the discussions are taking place right at the times where the weather is most severe for our region. So basically, if the decision is made to cut down on production, then it'll take about 3 to 4 months to actually meet this requirement.
So at least March or April of next year.
But once again, I hope that maybe these measures won't be necessary because, as I already mentioned, the price is where it should be, to my opinion. We're not working with the volume, so with the price, we're trying to cut down on the inventories. So the production cut is not fundamental. The inventories is what we're working with.
January 1st, New Year's, where do you think oil will be trading?
I believe there won't be a rapid dramatic change.
So in the 60s?
Yes.
That's the CEO from the Russians at Lukoil. Let's bring in Anthony DePaolo, our reporter in Dubai. Anthony, of course, the corporates have been at the door of the White House talking about the risks from lower oil prices. This is the Russian corporate voice. We're in OPEC. What's the magic number that will deliver stability and a floor to this market in this time?
Some of the delegates are talking about 1.3 million barrels a day. But we've heard that some others are saying that they could agree to less than a million. So it's really going to be how OPEC makes up those numbers. Saudi Arabia, which ramped up its production the most after June, when OPEC exited their period of strong cuts, they reached a record of over 11 million barrels a day last month. So given that increase, it's going to be Saudi Arabia that's going to have to claw back the most barrels of the group, but they really want to spread some of that consensus around and get the others to participate. There's a lot of daylight between what it seems the Saudis want the Russians to take off the market and what the Russians themselves seem willing to reduce. So that's going to be a big issue there, because it really is the Saudis and the Russians who are the main heavy lifters, the main parties going ahead and implementing these cuts. And the other ones are going to have to make up some difference. So it really depends on how OPEC counts those numbers and where they get up to the million, 1.3 million, Manus.
I'll take it from here, actually, Anthony. And the thing is, and I think you just really alluded to it and hit the nail on the head, it is now Russia plus Saudi Arabia doing what they want and OPEC having to follow. How are the rest of these OPEC members feeling redundant, largely?
They clearly have less of a voice, because it's those two big members that are pulling the group on, and it's that wider OPEC Plus group that really is necessary to have the impact on the market. We saw the Saudi and Russian leaders meeting in Argentina at the G20. We saw the energy ministry officials meeting again this week ahead of the OPEC meeting. So it's really that nexus that is pushing the consensus together. As I said, those other countries, those smaller countries, will have to make up the numbers. There are a lot of different ways that OPEC can parse things and see what's going to happen. For example, Iran has said they won't participate in any cuts while they're under sanctions. But what number of production do you assign to Iran? Does Iran get to keep their previous limit that they had in the 2016 deal, even though they're producing below that? So that would give a nominally higher level for OPEC production when the actual production is lower. So it really depends on where OPEC makes up these numbers. Are they going to count the Canadian barrels that Alberta has decided to take off the market? So we'll really need to see the details there, how they get to that 1.3. And if they don't get that level, that could be something that the market doesn't appreciate, pushing prices down further. If they do come out strongly saying that they've got that level, well, then they risk the ire of Donald Trump and more tweets.
Anthony, thank you. Middle East energy reporter Anthony DiPaolo there joining us from Dubai. Now, up next, RBS CEO Ross McEwen talking to us exclusively about his Brexit fears. This is Bloomberg. RBS, Royal Bank of Scotland, saying a hard Brexit may cause Britain's economy to go into recession. Speaking exclusively to our own Francine Lacroix, CEO Ross McEwen discussed how the bank is hoarding cash to help customers through the split, and also what he thinks about the prospect of a Labour government.
We're certainly in a very, very tense political moment at the moment with the vote next week on the proposition that the Prime Minister has negotiated. And it looks like the politicians have got some big decision making to be made. The big thing for me is around how do we bring some certainty into this marketplace, because you are seeing even the equity market off again today, has been off. I mean, our own stock's off 20% this year. It's pretty much all on the back end of what's going to happen to the UK. Will there be a deal? So I think the uncertainty is the issue that we're dealing with.
Yeah, and you've urged MPs to actually back this deal that goes to Parliament on December 11th. What happens if it doesn't get backed?
Well, I have been a backer of the deal because at the moment I don't see another deal. And so from a business perspective, we need certainty. And with any deal where you've negotiated hard over a long period of time, you're not going to get everything you want. You know, there are going to be parts of that you have to, give up on to get something else. And for me, it's around how do we get some certainty into the marketplace, because what is starting to happen is investment is not being made. And we've called this for the last 6 to 12 months that larger companies are not investing for the long term at the moment. They're wanting to see some certainty. And that's what I think is really important for the UK economy, is to build some certainty, find ourselves through this. And I think it's really now in the hands of our MPs. And I've said, there's a deal on the table, make your minds up, do you want it or not? Okay,
do you think SMEs, if it was worst case scenario and we have a hard Brexit, are they ready for it?
I don't think they are. The conversations we've had with many of our biggest business customers, and remembering we are the largest lender into the business economy. The bank might be ready, but there are many of our customers that are just not ready for a hard Brexit. They don't understand it. They don't understand the ramifications. So we've been out talking to customers over the last 3 to 6 months, saying, what are your contingency plans? And what we've found, there are very few with firm contingency plans. And many that have thought about it. For example, if you're in the construction industry and you're importing things from Europe, you're saying, okay, so where do I store them? Where are the storage areas that I can store these goods? If I do need a 3-month supply chain extension, where do I store? So I think these are the issues that many businesses have looked at and then said, I just don't know how to work this through.
Do you see a recession coming?
Well, look, I think if we don't get a certain position and it's a hard Brexit, I think there is a chance this economy will go into recession. And I know anybody that says you're a Remainer and therefore, no, I think the reality is that uncertainty will push this economy into a much slower growth than we've even had in the last 12 months. That's just a reality. And I said that actually 2 years ago when we were being asked what would a Brexit move look like. I said, I think you'll see a slowing down in this economy. And I think you're just starting to see the ramifications coming through today.
I mean, are there about 12 options right now for Brexit on the table? And what's the percentage chance of a hard Brexit?
Well, I think when we looked last and did our own review at the last quarter, we said there was probably a 20% chance of a hard Brexit. And what we had to do at that point in time was to actually make a provision in our impairments against the modelling that we have. And I think that took the market by surprise. But the way our accounting treatment works is when our model shows something that could be negative, we have to start impairing and taking that charge. So there is probably a 20, maybe even higher chance of getting no deal whatsoever.
Ross McEwen there, CEO at RBS, talking to our very own Francine Lacroix. Coming later on the show, and on Bloomberg, I should say, we speak exclusively to the former UK Prime Minister Tony Blair. That's coming up at 3 p.m. Dubai time. Up next, they're going to be hearing from the former PBOC Governor Joe Chuan. He says he's optimistic about a trade truce with the United States and China, but is the bilateral approach the best way forward? That's next. my God, it's just gone 12:30 a.m. there in New York. 1 degree Celsius in the Big Apple. Looking also at these equity futures, more pain in store at the moment. Big falls for futures, indicating big falls at the start of the trading day, some hours away. S&P futures down 1.2%, NASDAQ 1.6%, and a 1.5% fallback on basic minis there for the Dow too. Well, let's have a look at what we have in prospect with the first word headlines from around the world. Here is Deborah Mao.
British China's embassy in Ottawa has asked Canada to free the Huawei CFO, Meng Wanzhou. She was arrested in Vancouver at the weekend, and the U.S. is seeking her extradition in connection with potential violations of sanctions on Iran. A bail hearing has been set for Friday. The company says it's not aware of any wrongdoing by Meng. In April, the U.S. Justice Department began investigating whether Huawei sold equipment to Iran despite sanctions. Saudi Arabia and its allies are recommending a curb on oil production, rebuffing a Twitter plea from President Trump to keep the taps open and the price falling. Meeting in Vienna, the OPEC Plus group secured Russia's backing for 6 months of reduced output from January, although specific cuts weren't discussed. A final agreement could see 1 million barrels a day removed from the market. UK Prime Minister Theresa May is said to be weighing a range of concessions to win over Conservative rebels and save her sinking Brexit deal. After losing 3 Commons votes on Tuesday night, she's held talks with prominent Eurosceptics to solicit their support. Northern Ireland's Democratic Unionist Party is said to be ready to drop their support for May's government over the so-called Irish backstop. The European Union wants internet companies including Google, Facebook, and Twitter to file monthly reports on their progress banning Russian-backed fake news from their platforms. That's ahead of elections next year. EU officials say they will add a rapid alert system, beef up budgets, and add expert staff and data analysis tools to help combat the spread of misinformation. Lion Air says it feels betrayed by Boeing over October's fatal crash and is threatening to cancel upcoming orders. A preliminary report from Indonesian transportation regulators didn't specify the cause of the disaster, but said Lion Air needed to improve its safety culture. Boeing issued a lengthy statement that included questions about the carrier's maintenance of the doomed plane. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg. Let's get over to David Inglis now for a look at the markets. David.
Yeah, last couple of hours in our session this Thursday, this is essentially, how things have shaped down really since that rally that we had on Monday. Basically, everything's disappeared. We're down about 4%. As you can see there, we're on track here for the biggest 2-day drop. If you put together Wednesday and where we are right now, going back 7, maybe even 8 weeks to the start of October here, volumes are right at about the 20, 30-day average. When you break it down, though, and you look within the hood, 90% of stocks are on the way down, and this is how things essentially break down across sectors. So we're down 2% on the index today. I'm not sure how clearly you can see that, but healthcare is down 3%. IT is down 3.1%. So within that, you have the chip makers, semiconductors in Taiwan, for example, leading declines there. There's also the Huawei story. There's the Apple story as well. It's a perfect storm really leading to 5-6% losses here in that sector. From the Monday close. And we talked about Huawei. I'm sure you guys have been talking about it. There's a listing here in Hong Kong. There's another listing in Shenzhen. We're down 7-9% there for those listings there. And just to mention here as well, into the close in South Korea, have a look at KMW. That was up 2%. These are suppliers or Nokia-related names. The reason I bring that up is because when you talk about 5G network equipment, if Huawei's having some troubles, some challenges, and ZTE is also having its troubles, you kind of think maybe Nokia can step into that, maybe potentially, and certainly the market thinks that way when you see on a down day like this, you have, Rish, these suppliers, these names related to Nokia getting bid up or at least not falling as much as the rest of the region.
Cheers, David. The former PBOC governor, Zhou Xiaochuan, says he's optimistic about a trade truce with the US and China showing a mutual desire to tone down the tension. Speaking to Bloomberg in Rome, Zhou warned against relying too much on a bilateral approach and said reform of the World Trade Organization, or WTO, is required.
I'm optimistic. On the one hand, it shows the both sides have a desire to de-escalate this trade frictions, trying to find the ways to ease up the frictions. On the other hand, they identify some of important element of the trade. I think one is the trade imbalance, and the Chinese side have a big offer to buy more of American export goods. On the other hand, is structural issues like the protecting intellectual property rights, technology transfer, that's the cyber intrusion, cyber theft, those of things. I think in Chinese side, we have a strong willing to reform domestically on those items, and we are going to use this kind of pressure to accelerate the legislation, the regulation, but especially the law enforcement in this regard. So so I think for 90 days period, personally, I'm quite optimistic that both sides can reach a certain kind of agreement on that.
So those will be the next steps coming from China to avert a trade war, so the one that you were already mentioning. Anything else that China should do in order to avert the trade war, do you think?
I think for Chinese side, we sincerely hope this many trade problems should be solved in the multilateral occasion through WTO mechanism. But we know that people now anticipate to have a serious WTO reform. We think that some of the reform are really necessary. That's one of the risks is if we use too much of bilateral negotiation or bilateral compromise among each other, it may cause a problem to today's multilateral mechanism and rule-based system.
Coming up on the show, investors wait with bated breath for details on the Russia-Saudi output curb pact. Our next guest saying a fuzzy cut is the most likely outcome. Find out what that is next. This is Bloomberg.
Saudi Arabia and its allies are recommending a curb on oil production. That's the base case scenario. Rebuffing a tweet from the President of the United States. It was a plea, depends what way you look at it, to keep the taps open. The meeting takes place in Vienna. OPEC Plus group secured Russia's backing for 6 months to reduce output from January, although the specific cuts, well, they weren't discussed. A final agreement could see 1 million barrels a day removed from the market. Joining me now on the rooftop here in Vienna, it's Bob McNally, founder and president of Rapidan Energy Advisors. Bob, great to have you with me this morning. Well done.
Thank you, sir.
You're the first off the blocks. So you're talking about the various scenarios, and you've written in your piece there could be a fuzzy cut or a clean cut. Which one do you reckon we're going to get?
I think we're going to get fuzzy. They're going to undo the fuzzy increase from June. They didn't specify who gets to increase exactly by how much. That's sort of left a little bit vague, but I think they're going to signal the removal of about a total of 1.2 to 1.3 million barrels a day. Everyone will go down about 2.5%, sort of in general, but the precise numbers and baselines, not sure we're going to get too much detail on that.
So if it is a fuzzy cut, as you say, obviously we're going to speak to a couple of different ministers over the next couple of hours. We've got Nigeria, we've got Libya in play. Are they going to lose their exemption?
You know, they might a little bit. I think there's a sense of wanting to bring them back into the fold. Their production has recovered impressively. Qatar has left. That's cast a pall over the meeting.
What does that do? What does that do to Libya and Nigeria scenario?
Well, I think it says, you know, come back in and at least accept a cap. Say maybe you won't go beyond a certain level, but I'll be very surprised if those countries take a cut from current production.
And in terms of, so I saw CIBC say you're going to need 1.3 million barrels a day cut to actually deliver, let's say, a recovery in the price. Would you agree with that? How do you look at the price?
Absolutely not, Manus.
Okay.
But the way we count the barrels, we need a good, clean, real cut of at least 1.5 million to 2 million barrels a day. I think OPEC Plus will only deliver about half of that headline 1.2 million barrels a day. The main producer to cut will be Saudi Arabia.
Okay.
They'll come down. Now, they were at 11.1, 11.2 in November, so it'll be a way down to the low 10s. I think Russia will be tardy. And
what do you mean by tardy? Because, I mean, this is where the gap is, isn't it, in terms of how much Russia are prepared to take versus what the market assumes.
Right, and then how fast. Even the first go-around in December of 2016, they said, look, it's cold where we work, and it takes us, we really can't reduce production so fast in the winter. So they even were tardy the first time around. They didn't really reduce till April. I think you'll see a tardy cut from Russia. They'll take probably around 250 to 300,000 barrels a day, but it'll be late.
Okay, so they're going to be late. Look, what is my risk here? We've already had a tweet from the President of the United States saying, keep the taps on, boys and girls. Is that my risk? I mean, I talked about a butterfly in price yesterday. Trump at 50, you got Mohammed bin Salman at 73, and you've got Russia in the middle at 60, 65. Is my risk a tweet from Trump in the middle of all of this again?
You know, the big risk is President Trump reaches for his tweet after the news reports OPEC defies Trump, and he says, give me NOPEC now. This is the legislation that would allow us to sue OPEC members under the Sherman Antitrust Act. All he has to do is tweet for that. It's very popular in Congress. One of the few things Americans still agree on.
How popular is that in Congress?
Overwhelmingly popular. It passed with overwhelming majorities in 2007. This is something Republicans and Democrats agree on. They don't like OPEC, and they see the Sherman Antitrust Act as the remedy for it.
If that kind of a tweet comes out, get ready for NOPEC, what would that do to the market?
You know, I think it would be bullish for WTI and bearish for Brent. The United States imports 43% of its crude oil from countries who are about to meet here in Vienna. And if we were to suddenly say, look, we're going to potentially attach your assets, impose big fines, those countries might want to redirect their exports from the United States to elsewhere. So bid for WTI goes up.
Do you think Mohammed bin Salman has had a sort of a nod and a wink that he can do something on production cuts at the G20? Or would it be utter defiance of the Saudis to cut more than their additions have dropped, i.e. 500,000?
Well, that's the risk of not doing it in a fuzzy way. If they do a clear, hard cut, it'll look like they're defying President Trump. And if the oil price rises sharply from there, President Trump will be set back. He'll look like he was defied, and he might get angry, and he might reach for that iPhone.
Let's deal with something factual. Global demand.
Yeah.
How tepid is the growth in global demand for you? Because the numbers, OPEC's advisors have already suggested you need a cut of 1.3 million barrels because of the overhang. The other side of the equation is demand. How does it look to you?
You know, it's coming down from 1.5, where we were, all of us, a few months ago, to maybe 1.4 or 1.3. But the real issue is the supply tsunami. Even with healthy demand, you're looking at well over 2 million barrels a day, 5 million barrels a day of supply from the U.S., which just hit a record and become the world's largest oil producer, Russia, Iraq, Saudi Arabia at record highs. So it's the supply tsunami in combination with the risk of lower demand. But again, I'll say, even if demand is robust, which it's not looking very robust, we're still oversupplied by the tune of 2 million barrels a day plus.
The biggest risk here is that it is, as you say, an opaque kind of statement. We go into, do you think that we should take at least heart the fact that the Russians have said they're committed for 6 months? That suggests to me that there will be some kind of a clearer definition.
Well, you know, even in December of 2016, when they did the first cuts, even then, they had a headline number in there of 1.8. But they didn't assign the cuts per country in that document. We had to go look around for the paper in the following days. So even that cut was a tad fuzzy.
It's a little bit like looking for the commitment on tariffs on autos at the G20. We'll leave it there, Bob. Let's see what details we get. He's off to do the red carpet, hence the reason why he got an early slot with me here. Bob, thank you very much. That is Bob McNally at Rapidan Energy Group, joining me for the first of our guests on the day on the oil market. Thank you very much for that. Much more to come from Vienna, the shape and size of the cuts. But up next, it is about the emerging market sell-off. It really, really has been ripping through the markets. We look at how the year is rounding out in our weekly check on Emerging Market Insight right here on Bloomberg.
Emerging market sell-off since April has basically hit all asset classes, although stocks, bonds and currencies have managed a slight rebound since November. But is it sustainable? Robert Brand is our emerging markets editor based in Cape Town. He's here to discuss the outlook, and we're going to kick things off with the foreign exchange. As the MSCI EM currency or emerging market currency index has bounced from that low that we saw in September, Robert, and that as the dollar rally faltered, US yields pulling back as well. Can this continue?
Yes, good morning. There are several factors that would support the emerging market currencies going into 2019. On a fundamental level, some of these currencies have got very healthy risk-adjusted returns or yields. A number of governments are in a much better position in terms of the balance of payments and fiscal situation than they were perhaps a year or two ago. Some central banks have been aggressively tightening policy. But for this recovery to become a sustainable cyclical recovery, a number of other things would have to fall into place. We'd have to see the US-China trade war play out. We'd have to see the Fed policy path play out. But perhaps most importantly, we would have to see the trajectory for global growth improve. And the outlook for that is not too clear. So the chart that we have there shows how implied volatility for emerging market currencies has changed since the beginning of the year. And you can see that for almost all those currencies, the implied volatility has climbed, in some cases substantially. And that just suggests that there's not a lot of conviction in the options market about this recovery, and that the emerging market complex remains very fragile going into 2019.
Robert, what about the stock side? Because I'm reading reports this morning from Investec saying, look, if you think that the drop or a correction in the United States is something that the emerging markets are going to escape from, you're very much mistaken. So the question is this: is emerging market stocks offering value or a bear market trap?
Yeah, are they offering value? You know, you often hear said that valuations are at multi-year lows, and so that the slump has bottomed or is about to bottom. But of course, you know, just the fact that something is cheap doesn't mean that it's now the time to buy it. There's a reason why things are cheap, and in emerging market stocks, one of the issues has been that analyst expectations of corporate earnings have been far too optimistic throughout the year, and as a result, actual earnings have consistently undershot analyst estimates. But if you look at that chart, it shows the ratio between EPS estimates and trailing 12-month earnings for the emerging market index. And it shows that ratio has actually been steadily declining throughout the year, and it's now at about a 3-year low. So that would suggest that analysts are becoming more realistic, perhaps, in their expectations of earnings, and perhaps also that earnings are starting to recover. And so perhaps that index is now more realistically priced than it was perhaps 6 months ago before the sell-off. Just one more thing about that chart. If you know, the last time that ratio actually was at around about this level, at the end of 2015, was just before the start of the 2-year emerging market bull run. And so if you believe that history repeats itself, then there's something for you to think about.
Robert, looking at local currency bonds, the picture isn't quite as bleak here. Is now the time to be buying EM local currency debt, or can you just get whipsawed by other things?
Yeah, look, if stocks are undeniably cheap at the moment, bonds are a bit of a different story. And my chart this morning shows that the average local currency emerging market bond spread over US Treasuries, the global risk-free benchmark, is still quite tight by historical standards, and in fact it's still well below the 5-year average. Okay, so that suggests that there is still room for that spread to widen out, and it suggests that bonds, by that measure at least, are by no means cheap at the moment. So I think the picture there is a little bit more muddled than in the case of equities.
Robert, thank you very much. Robert Brand, the emerging markets editor from Cape Town. Beautiful backdrop, a little bit warmer there possibly than it is here. Richard, let's shift the agenda along to the daybreak briefing. The team is standing by. It's on your mobile, it's on your digital device, it's on your desktop. Her name is Christine Burke. She joins us now from our Dubai studio. Christine, always good to see you setting up the agenda. First up, let's talk about China, because they've weighed in on Tesla's manufacturing plans, saying that we may need to see production next year. What is the agenda here?
So the mayor of Shanghai has apparently taken a trip to the production site or the project site of where Tesla is building this mega factory known as Gigafactory 3. And it essentially told Tesla, hey, you need to speed up construction of this site. And so there was a statement that was put out on the city of Shanghai's official WeChat account saying that Tesla is planning to start at least some production, partial production in China of some of the Model 3s in the second half of 2019. Now, the timing makes sense considering the comments that we've seen from CEO Elon Musk. He has floated a timeline of next year for starting production in China. And we've also seen multiple media reports out recently about how Tesla is ramping up hiring in China as it really tries to get this factory off the ground and push forward with production in China.
Christine, Lion Air, of course, making headlines, threatening to cancel a huge order that they have with Boeing. I think it's $22 billion worth in aircraft orders, and says that it feels betrayed by the response to the crash that they had with their 737 MAX in October. This is pretty significant an order, and how significant is this for Boeing?
I mean, look, Lion Air is the third biggest customer for Boeing's updated 737 MAX jets. Flight Ascent Consultancy says that Lion Air is due to get 7 of the aircraft in 2019, 24 aircraft in 2020, and 35 in 2021. So this definitely is significant, not only for these orders, but also for the overall mood around the 737 jets. It's important to note, though, that airlines typically can't just unilaterally decide to scrap their agreements. There's usually a review process that needs to take place. And so it's unclear as of yet if we will actually see this threat materialize. But it doesn't look good, especially considering that Lion Air was the first customer of that updated 737 MAX jet. JP Morgan says this is something that you will want to keep an eye out for, though. You will want to monitor the situation, but that as of now, it seems that airlines are still buying the 737 MAX. So that's a good sign for Boeing, at least just for now.
OK, Christine, thank you very much. That's Christine Burke there with the very latest on the agenda for the day ahead from the Daybreak team. Rashad, it's been a real treat. It's been, how many years since we managed to present a show together? So let's just leave with a quick view on the markets. You're looking at the Asian equity session down. It is tech that really is under pressure there on the Huawei story and the global growth prices readjusting really in the markets. Brent also down by 0.8%. Rashad.
Yep, FTSE futures pointing to a lower start as well, seeing what a 74-point move to the downside there. Looking across the board, it is a red across Europe. We're counting it down to the starting of the trading day in London, Paris, Frankfurt and Milan. Looking at more of the same. What was over here in the Asia Pacific is likely to be over there, but it's all about OPEC, Manus.
Yep, Rashad, it's dawn here in Vienna. We have a host of guests. Daybreak Europe continues. This is Bloomberg.
Founded more than a century ago from humble origins, L'Oréal is now the world's biggest beauty products company. Specializing in cosmetics, hair, and skincare, it boasts an international portfolio of 34 brands and has a market cap of more than 105 billion euros. At the helm, a man who's dedicated his entire career to the company. Over 4 decades, he's covered all facets of the business. Today, on Leaders with Lacroix, we meet Jean-Paul Agon, Chairman and CEO of L'Oréal. Monsieur Agon, thank you so much for speaking to Bloomberg.
Pleasure.
What happened to L'Oréal in the last 10 years? Innovation, your share price has grown. Was it exciting times?
Yeah, very exciting. You know, I started as a CEO 10 years ago. It has been 10 years very exciting. Of course, we had a crisis in 2008 and 9. But globally, the business has been very good. We have been growing, acquiring brands, launching new products, gaining market shares everywhere in Europe, USA, China. No, very exciting, fantastic.
What's been the most fun?
In fact, the most fun has been the past 3-4 years, because thanks to the digital revolution, everything has been transformed. And as I tell my teams, I think that this industry, our business, our company has more changed in the past 3 years than in the previous 30 years. So it's an amazing time, extremely exciting.
So is this the way you sell, or is it the way that people actually look at makeup?
No, in fact, it's the relationship between brands and consumers. In fact, the digital has completely transformed the relationship between the two. Before that, you know, the brands were talking to consumers, pushing towards them information or whatever. But now the consumer has taken the power. The consumer decides how he wants to see the brands, what he wants to know, what he wants to discover them. Digital, in fact, creates a relationship that has nothing to do with what existed before.
But isn't it much more difficult, therefore, to control your brand?
Yeah, but at the same time, it's more exciting, and it enriches the relationship. So now, thanks to digital, we can communicate the content of our brands. We can do tutorials to explain how the products work, how they should be used. We can have a personalized relationship with consumers. So it's a completely new dimension. It's much more rich and exciting.
So what sells at the moment? Is it the luxury brands or is it the more consumer brands?
This year, luxury. This year, luxury has been booming everywhere, mostly with Chinese consumers. You know, Chinese consumers are fantastic. They love beauty, they love luxury, they love our brands, and our business with Chinese consumers everywhere has been booming.
L'Oréal's global reach stretches across 140 countries. About 2/3 of its sales are generated outside of Europe. Much attention has shifted to China, where strong demand for high-end lipstick and perfume is driving growth. In 2015, China surpassed France to become the group's second biggest market behind the United States. Some of the success is being attributed to selfies, with camera-conscious millennials buying more makeup than ever before to look good instantly. Have you had to adapt to the Chinese market?
Yeah, in fact, the products we sell, not for all brands, because the luxury brands, for example, are the same all over the world, of course, but for our mass brands like L'Oréal, like Maybelline, the product that we sell in China are formulated in China by Chinese, in our Chinese labs.
Because of regulation?
Not only, but also because we want to create the products that are absolutely right for them, especially skincare, because their needs, their skin, their aspirations are specific, are different. So we formulate in our Chinese labs, we manufacture in our Chinese factories, and L'Oréal now is L'Oréal Paris is the #1 beauty brand in China.
I've also been reading that one of the most popular products is actually a homemade, I guess, range of cosmetics wear, which is favored by the wife of the president, President Xi.
Yeah, it's a great brand, but still the #1 beauty brand in China, the preferred beauty brand by Chinese women is L'Oréal. L'Oréal Paris, they call it with the Chinese name, it's Pali Olaya, which is beautiful, by the way. And it's great because, you know, the L'Oréal Paris is the number one beauty brand for Chinese, for Americans, for Europeans, for Russians, everywhere. So it's It's a
Not
great
bad.
satisfaction. Yeah, not bad.
So tell me about your success in China. Is it through distribution? Is it through ads? Is it through celebrities? What's the attraction for your brand by the Chinese?
You know, the reason of success of our brands everywhere is always the same. It's number one, quality. You know, we for all our brands, our absolute priority is the quality and safety of our products, and it's something that the Chinese respect a lot. It's very important for them. Number one, innovation. Innovation is extremely important. It's an industry where you have to innovate a lot. You know, more than 15% of our products every year are new in order to keep innovation flowing very strongly. Of course, it's the imagery of the brands. You know, brands like Yves Saint Laurent, Lancôme, Giorgio Armani, L'Oréal Paris. It's a beautiful imagery, and Chinese consumers are very sensitive to that. They like it.
Is the US tough? A tough market?
The US this year is a bit tougher, a bit softer, let's say. It's not really tough, but it's a bit softer. Certainly softer than China, but it depends. You know, last year the US was very good. So every year, it's funny because every year the market roughly globally is more or less growing at 4%, but it's never made exactly the same way.
But so how difficult is it to predict what will work and what won't? Why am I using this mascara, not the other mascara? Why am I using this foundation, not the other?
Again, it's very, you know, when you know well your consumers, when you understand their desires, when you can guess their dreams or expectations, then you can really create what they will love.
What will the next 4 years bring? Is there a specific market that you think will grow more? Is it, for example, men's cosmetics or something else?
You know, digital, I think, will be the most important element of transformation of the market. So definitely we're going to see the e-commerce growing. For example, e-commerce in China is already more than 30% of our sales for our mass market brands. So it's huge. So we're going to see digital growing. We're going to see probably new channels also emerging, like specialty stores, our own stores. We are very big in also growing segment is the travel retail, you know, the stores in the airports, because more and more people are traveling. So I think there will be new channels. In terms of regions, of course, the emerging markets are still growing, and our categories are growing too. Makeup has been booming for 2 or 3 years. I think it's going to keep booming. Skincare is growing too. So honestly, I'm very optimistic about the short-term, middle-term, and long-term perspective of this industry.
What do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products, it's unfair.
And a few secrets.
And a few secrets, but you can tell us, we're amongst friends. We were talking about what the next 4 years will bring,
Yeah.
and it's a lot more e-commerce. How do I choose my makeup online? It must be difficult to choose the right coloring.
No, because now you have some technologies that are amazing. You know, you can test online on your cell phone, for example, simulate the application of the makeup on your face, and then you see yourself with the lips covered with the lipstick you want, the shade you need, the powder, the mascaras. You know, I did a demonstration of that to my board, you know, completely made up, and it was they were ecstatic.
Was that for the launch of the app?
Yeah.
And so they said yes.
Yeah, I wanted
fantastic.
I wanted to share with the board the fantastic progress of technology. It's amazing.
Oh, I could look like pure reds. Oh, wow.
The lipstick is moving with my mouth, and I know that I don't have any on. It's like Amy Winehouse flicks. It's brilliant. I can't stop looking at myself.
So this is amazing because you also have to then change, I guess, your research and development. How much of the overall cost goes on actual digital products?
Well, it's difficult to say because it's everywhere, in every brand, in every division. But what I can say is that now, more in terms of media, 1/3 of all the media that we do now goes on digital. In terms of e-commerce, 7% roughly of the sales that we do go on e-commerce through digital, and it's growing 30% a year. So there is a shift happening, which is extremely fast, extremely strong.
The company that invented the platinum blonde is constantly innovating and developing new products as consumer demand changes. At its lab in Paris, scientists have studied more than 7,000 types of hair and are now experimenting with 3D printing. The hope is to one day help people suffering from hair loss. L'Oréal's already created fake skin to avoid testing products on animals and invented a UV patch to monitor exposure to the sun's rays.
We have the #1 R&D facilities in the world. We are spending roughly 3.5% of our sales in research and innovation. And obviously the most important topics are hair, skin, and hair. This is where we invent and create new formulations for hair care, hair color, all type of hair products.
You also have a patch?
Yeah.
Is that right?
UV patch.
A UV patch, so you
Yeah.
put it on to see when you're overexposed to the sun.
Yeah, it's a creation that was made 2 years ago that we presented at the Consumer Electronics Show in Vegas last year. And it's a UV patch, you put it on your skin, and it's linked to your cell phone. And it calls you or it rings when your exposure to UV has been too high. It's a fantastic tool.
So do you think though there's going to be more of a trend, which I guess is between the cosmetics and the healthcare?
Yeah, absolutely. Yeah, and also with internet, you know, this triangle between beauty, health of the skin or hair, and Internet of Things. Is creating new opportunities, and that are going to be very useful for consumers.
What do you like about your job the most?
I love understanding people. You know, I think that one of my strengths is the capacity of empathy with consumers. So I have this capacity to understand, to feel, to guess what consumer want, what is their desires, sometimes their dreams, and then to be able to formulate products that will respond to these dreams.
Do you believe you have to take risks to innovate, or
yeah.
actually, do you?
Oh yeah, of course. Yeah, because every innovation by definition is a bet. Every launch is a bet. It's like a new film or a new movie or new music. You never know in advance. But that's the magic of it.
So what do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products, it's unfair.
And a few secrets.
And a few secrets, but you can tell us, we're amongst friends.
No, we are working on all categories. You know, we have 3,500 researchers from many departments, and they are all working on all type of cosmetics, skin care, hair care, hair color, all sun care, and because fundamentally, as I told you, we really believe first and foremost in terms of efficacy and quality. So you know, the mission of the company, which is beauty for all, is also not only beauty for all, but the best of beauty, the best quality, the best performance, the best efficacy, the best safety, and that keeps us busy.
3,500 researchers.
Yeah.
How long does it take from, I don't know, who has a concept of, for example, a new product, until that product being on the shelf for someone to buy?
Depends. Can be very quick when the formulation is easy. Can take maybe 6 months, or when for example, the marketing guy has a vision, has a dream, but the labs don't know exactly how to formulate it. Can take 2 years, 3 years. Really depends.
Mega volume on top, mega volume on bottom. Share it with your friends and buy makeup instantly.
One of the criticisms often leveled at the beauty industry is that it's only for young people. Is there any truth in that?
No, not at all, of course not. First, that would be stupid, because we are addressing all needs for all people, and look at our ambassadors. For example, Jane Fonda, Helen Mirren, they are not millennials. So no, honestly not.
Do you sell more to millennials or to people of a more certain age?
No, we sell to everyone. It depends the brand. The brands, of course, some of our brands like NYX, Urban Decay are more targeting young people. Biotherm or L'Oréal Paris may target other categories of consumers. But no, we cover the whole scope of consumers. And in terms of age, in terms of diversity, in terms of countries, Chinese, Brazilian, Europeans, everyone. It's a beauty for all.
So how do you sell to the emerging markets?
We adapt the products that we sell, of course. We make sure that they are affordable and that people can buy them. Brazil, for example, is very interesting because Brazil is the country in the world where the hair is completely unique, because it's such a mixed country in terms of ethnic origins that the blend is completely amazing, and that you have to create for Brazilian hair care products that are completely specific. And by the way, it's very interesting because sometimes they are the most demanding consumers, and so when you can create in Brazil a product that is good for them, then you can make it for the world, because it's going to be great for everyone.
Do you think Generation X cares more about this than millennials?
There is an urgency, clearly. We are not talking anymore about a potential threat. I mean, there is a clear and present threat.
Jean-Paul Agon, life at L'Oréal began in sales 39 years ago. He quickly understood the power of advertising.
Read my lips. I'm worth it.
The company obviously thinks it is worth it, spending more than $8 billion a year selling and marketing its products. A third of that on digital media.
When I was 20 years old, I was in a business school, and at the end, I knew I wanted to do marketing. And for me, beauty is the supreme art of marketing, because it's a marketing that is not only about, it's also about emotion, guessing, creation. So I think it's a fantastic marketing. There is no better marketing than beauty marketing.
And from that 20-year-old Jean-Paul Agon, what have you learned about yourself?
My God, a lot, a lot, because it was a long time ago. No, it took me, many years to get where I am today. But I was always passionate. I think the incredible part of L'Oréal also is that every day is a new adventure. Every day is a passion. It's a company made of really passionate people, and every new mission is an adventure.
So what are you like as a leader, micromanaging or overview?
I like overview, and from time to time I'm tempted to do micromanagement, but when I do that, my team say, Jean-Paul, you should not, you should not bother.
You review though the end product every time, or how does it work?
As much as, I have meetings with, of course, with all the brands, not all the times, of course. I travel in many countries around the world, and I'm just trying to help, to make sure that we are taking the right directions, pushing in the right innovations, understanding enough the consumers we are dealing with, trying to pilot the ship.
L'Oréal's Sharing Beauty with All program, launched in 2013, was designed to transform the business. Jean-Paul Agon was determined to make the company ethically and environmentally sustainable. It's been recognized for its efforts, awarded a AAA for water management, climate, and action against deforestation.
So when did you start thinking about sustainability?
Pretty a long time ago, especially when I came back from the USA and I took over as a CEO. I really understood at that time that for a company like L'Oréal, especially because we are the leader of the beauty industry, we had to make sure that also we would do the best and the most to make the planet a beautiful place.
What started it? Is it because you say we sell so much so we have to make sure that it doesn't go to waste? Or is it also because the consumers want something that's more sustainable? Or is it because the employees you hire want something more sustainable? Very
good points. I think it's all of that. First, because we have a moral duty. Secondly, because it's what our employees are asking for. Third, because it's what consumers want. Fourth, because it's what the society expects from a big company like us. So that's why we really went into this direction.
Does it make a difference for the consumer? I remember you telling me maybe, a couple of years ago, that if a consumer has a choice of a sustainable shampoo or a shampoo that makes our hair better, we'll always go for the shampoo that makes our hair better.
Yeah, but now what we want to do is to make a shampoo that makes the hair better and sustainable. Because now in fact, you're right. Our vision is that we have to find a way that it's not opposite, that it goes in the same direction. And it's the same for economic performance. For example, the sustainability performance should not be opposite to the economic performance. And in fact, we are able to prove that. For example, in the past 10 years, we reduced our carbon emission by 67%, when at the same time we were able to increase our production by 30%.
How do you do that?
We work a lot. We transform all our factories. We have now 10 sites that are carbon neutral. We completely transformed the way also we engineer with water. We have what we call dry factories, that they don't use water at all. They completely recycle the totality of the water that they use. We eliminate waste. So it's a very comprehensive effort on all fronts to transform completely the way we produce, we distribute, etc.
And shareholders are behind you every step of the way for sustainability?
Yeah, absolutely. They are very. I think that our shareholders are very proud of what we do. I cannot say that they are pushing us hard to do it, but they are happy and proud.
Do you think Generation X cares more about this than millennials? The younger you are, the more you think about this?
I think that everybody now cares. I think that it's very well understood that there is an urgency. Clearly, we are not talking anymore about a potential threat. I mean, there is a clear and present threat to the planet, and if we are not all doing the maximum in the very short term, it's going to be very difficult. So I think that every generation now understands that.
If I speak to you in 5 years, what will be your story?
In 5 years, probably I will tell you that the most important mission has been the transmission. Because, of course, I will not be CEO forever. And I will be, by the way, very glad to pass the baton one day to my successor.
So if you think a lot about succession, what kind of successor would you like, and what would you like your legacy to be?
I will be proud to have been able to adapt L'Oréal to the new world. I think that we are living in a very special period. The world tomorrow will be very different from the world we knew a few years ago. And my absolute priority right now is to adapt, transform the company in order to make it as successful as a leader, as performant in the new world as it was in the world before. And I'm very confident about it, because that's what we are doing. We are doing a cultural revolution, a digital revolution, a sustainability revolution, and so the L'Oréal will be a fantastic company. And then someone else will take the baton and will drive the adventure further.
Jean-Paul Agon, thank you so much.
Thank you very much.
What do the world's tallest building, KFC in the Middle East, and e-commerce site Noon all have in common? They're all owned by billionaire Mohammed Al-Abbar. His investments like the Burj Khalifa and the Dubai Mall have become iconic landmarks, and he's diversified into hospitality, retail, and e-commerce. He was named the most influential man in Dubai and consistently ranks amongst the top 5 most powerful Arab business leaders. But it's not all business all the time. He's also a sportsman. He's an active member of Emirates' horse racing community. Today, on Leaders with Laqwa, we meet Mohammed Al-Abbar, the founder and chairman of Emaar Properties. Thank you so much for joining us. You've really built a conglomerate. You've built a company that has multiple interests, multiple units, multiple portfolios. Did you diversify because you saw an opportunity or because you had to?
Well, I think all of us, we look at opportunities. We don't really have to do anything. But I think looking at the Middle East and looking at the industries that I went in with my team, I think we saw amazing opportunities in the Middle East in these sectors. And I'm glad that even though we've got difficult years, the past 2 years have been difficult years for us, still these businesses are operating well. So definitely it's based on opportunities and the sector's long-term growth potential.
Where do you see the most growth coming from? Which portfolio, which part of your business will do better than others?
The food operating well and strong in the region as a whole. Especially with the food delivery business, and that's another story. I would say that our real estate business is still flying really strong. I mean, last year we grew about 28% in the region as a whole. Our e-commerce business is something that's very, very interesting. And we've got an amazing team looking at it, and that's also growing quite fast. But even with this growth, I think one have to be realistic as well. So you look at this growth and you look at what's going on in the Middle East, government policies, look at the world economy and what changes might take place. So you have to be alert at all times.
Okay, what does that mean? Do you expect a lot of the growth, in the Middle East? If you look at e-commerce, and we'll talk a little bit more about that, do you expect it to go 3-fold, 5-fold over the next 5 years?
Well, I would say that our real estate business should continue to grow at about 20% a year. And that's the shareholders' expectation. And it's hard work to achieve that number and keeping costs under control, margins under control, and political and macroeconomic issues in hand. So the food business, I think we should be growing 10% a year, year on year as well in the region. And keep in mind that, we're talking about the Middle East where, there is a need for most of industries to grow just because I think the Middle East still has room to grow. And the other thing is that if you look at the population in the Middle East as well and the whole demographics is in our favor.
Because they're young and therefore these are, I guess, the youth will spend a lot more in 5-10 years.
Yes.
How will the economy shift?
Well, I think the economy will shift positively only because I believe Middle Eastern governments are really working harder than any other time in the past. And you see the changes that are taking place, positive changes that are taking place in Saudi Arabia. I think that's the same thing within UAE. I would look at Egypt. I'm quite interested in Egypt as well and the change that's taking place in Egypt. With all the other issues that we have in the Middle East, where I believe that I don't think it's going to get any worse than this. I think we're looking forward to a more positive trend in policy and in politics and economic growth as well.
In terms of growth country by country, which is a country that will outperform the others in the Middle East?
The majority of our focus is Saudi Arabia, UAE, Egypt. And I would say Egypt is going faster now. Saudi Arabia, I'm quite optimistic with the changes that you see taking place within the coming 24 months. I think you'll see quite a good trend, and the UAE as well. You've got, of course, the other Arab countries who are some slow, some moving forward, but majority of our business are in these countries.
I mean, you're holding a big investment with the PIF on e-commerce for Saudi Arabia. Will there be more, for example, on property in Saudi Arabia?
Well, the Public Investment Fund, they are with us in our e-commerce business, but they are also with us in our food business. Now, are we going to do more together? I think there's a possibility. There's a lot of work that they're doing in Saudi Arabia and outside Saudi Arabia, in the region and outside. So I would expect that maybe we should look at real estate together as well, because I think Saudi Arabia will look very interesting the coming years.
How much can it grow, property in Saudi Arabia, over the next 5 years?
Oh, Saudi Arabia, I think it's at infant stage. I think Saudi Arabia can really grow if you talk about pure infrastructure, if you talk about retail, industrial, hospitality, residential. So you just have to make sure that you are going at the right category of residential or the right category of retail. So there's plenty of room to go that way.
When you look at how you spend your time for each of the units and also each of the countries, how do you do it? How do you keep on top of it all?
Well, I try. I still say that the real estate takes a majority of my time.
Is that 50%?
I would say the real estate takes about 40% of my time. And then the rest is split. Noon takes a lot of my time as well. The food takes the least of my time because the team that sits on top of that business is really world-class team. And they've been in the industry. They know the industry well. Noon is a vibrant team. It's a new organization. I need to give it more time. While my real estate business, I have an A team, but I'm emotional about real estate.
Yeah, I mean, this was like the foundation of it all, right? Do you still see it as your baby?
I think my name is really linked to the real estate more than anything else, while all these other businesses have been with them now for about 2 years. So it's a new brand of product that's associated with me.
When you look at the various IPOs and the various units, was it to unlock value, but did you ever feel like it was also high risk?
I think mainly to unlock value, and we have investors who have put in their money with us, and it's time for them to get rewarded. But at the same time, I really like putting management under pressure, because IPO is quarterly results. You're out there in the public eyes, under pressure to perform. But mainly value creation. I think that's the business we're in.
Value creation, because shareholders understand what you do more, and it almost focuses the mind of managers more?
Well, that is one, but many of our units, that if they're under the mother umbrella, I think value-wise, they're not fairly valued. So as we put them on the side and put them as separate entities, I think you create better value that way, and then you cash out a little bit and put management under pressure.
Are you looking at IPOing any other units or portfolios?
When you look at our business, we have businesses. We have India, we have our hospitality business, we have Turkey business, we have another business in Saudi Arabia. So the reality is that you can take all these businesses public at the right time. I think within the coming 3 years, we'll probably have India going public. We probably have hospitality as well going separately to the public route.
But so how much bigger will you be if I speak to you? And I hope to speak to you before, but if I speak to you in 5 years, how much will your holdings be worth?
I think we should be double in value, because we should be growing in value 20-25% on an annual basis. And I hope that my management and my boards really put that as a focus. And to be honest, I think we're capable of doing that. We just have to focus and have to make sure that we have the right people to do it. And we do this day and night. And that's really how we do business in our region.
But that's acquisitions or that's organic growth?
I would look at organic growth. If you talk about acquisition, which we have not done much of, I'm expecting that we do more acquisition in the coming 2 years.
Mohammed Alabar, thank you so much. Coming up next, going from bricks and mortar to clicks, we talk Mohammed Alabar's big push into e-commerce and how his company Noon could become the Amazon of the Middle East.
Mohammed Albar is not only a titan of property, he's also betting on e-commerce. His startup, Noon, launched its operations in the UAE last year. The site is described as an Arabic-first e-commerce platform and is rivaling the Amazon-purchased Souk, looking to take over 15% of the growing market. One of the biggest investors in Noon is Saudi Arabia's public investment fund, which put up $500 million. But Albar is not just competing against Amazon. He's also a major player in the luxury space. He's partnered with Yux Net-a-Porter Group to offer a premium retail service to the Middle East's fashionista set.
So Mohammed Albar, do you ever feel like there's a conflict that you actually own Dubai malls, but at the same time you're trying to sell on e-commerce platforms?
The issue is that, are you relevant? That's really the big question that we have, is that I don't think it's if there's a conflict or not, but are you relevant to the space? So are we really relevant in this retail scene, or in the whole, the economy is becoming so digital? If you are not thinking about it, if you're not acting to do something about it, I think there is a risk of your business being probably at huge danger the coming 24 months.
And so how do you stay relevant?
I think staying relevant, first of all, I have to talk to my kids all the time. And I learn from them because, I have a little girl that sells jewelry to women in Korea out of Dubai on her Instagram. I mean, what type of world is this? So therefore, I think all of our business, from real estate to retail to hospitality, I think the digital scene is changing all that. So if we talk about e-commerce specifically, or if we talk about Net-a-Porter, it is just moving your business to the digital scene. And I think the whole economy is moving that way, from healthcare to education to retail. So therefore, I think we just want to be relevant. And I don't think there's any conflict, because at the end of the day, there ought to be a collaboration or connection between the real world and the physical world. And can we really try to find a solution and work them together and stay relevant in our business?
But so how much of your sales will actually be done on your e-commerce platform in 5-10 years? And in general, for the Middle East, are you a step behind in actually selling on e-commerce? And so is the potential much bigger than here in Europe or in the US?
Well, remember, I mean, when I look at the Middle East right now, I mean, e-commerce is between 1.5% to 2%.
Tiny.
Which is tiny compared to the rest of the world. So there is room for all of us to grow. Where will this be? I think it will go much faster than the rest of the world, and it will get into the 10-15% quite fast, again, because of the demographics of the region. So we owe it to our society, we owe it to our 300 million Middle Eastern Arabs, that there ought to be a native organization that look after this sector and participate and learn and serve.
What will Noon become? And are you nervous at any point that you're going to head with the most successful retailer of all times, Amazon?
Well, Noon, of course, it will be an ecosystem. And am I nervous? Of course I'm nervous. I'm nervous from everybody. In my real estate business, I'm nervous. In my e-commerce business, I'm nervous. In my Net-a-Porter business, nervous, because competition is severe and markets are open. Anybody can come in. The big players are going to come in. Some of them came already. More are going to come to the region. But I am from that part of the world, and I think it's our duty to participate in the scene. And remember, we as Arab businessmen, we're a bit tribal, which means that I am from this society. I have a duty that get into business and be aggressive and achieve the numbers, achieve success. But that's a duty that I feel responsible for, that competition is good for the consumer in the region, rather than one player come and controlling the life of our customers. I think it's fair to have competition and let the customer win at the end of the day.
Okay, but how do you decide? I mean, how will you go against Amazon? Do you have to convince retailers to sell on your platform instead of Amazon's platforms, or is it a price war? I mean, how do you see the kind of the fault lines?
Well, we are working with the local retailers, and we are their partners. Now, how other international players, they do it, through sourcing overseas or working in some other methods, that's their business. But we differ is that our partners are the local retailers. Maybe our margins will be a little smaller, but that's okay. We'd rather win on the long term rather than alienating the local retailers. Now, will there be a price war? Well, the past 2 months there's a price war. Customers are winning. Everybody's 20% or 15, 10% cheaper in some of the product. So I'm so happy that people in my region, they don't have to buy milk for their kids at 10% more expensive. There was one operator or one monopoly controlling, the human life. I think this is good for all of us. So of course there'll be a competition. But the amazing thing is that the world is open. So much new technologies are being provided to everyone that want to go into the scene. But are you planning long term? You have good people with you. Are you serious about it? Are you willing to provide quality service?
But is it the service or is it the products? How does the Middle East actually shop? What's selling at the moment and what will sell in 5-10 years?
Well, if you look at the mix of what's happening on the e-commerce scene, it's not much different from what's going on in the world. People want delivery, fast delivery. People want quality.
Will they pay for the delivery?
For the time being, we're subsidizing delivery. Because, as I said, people are just learning the art of e-commerce, and that's what global companies are doing. They give it to you for free first, they get you used to this way of life, then later on take a little bit of margin, maybe control market, the usual trick. But what I'm saying is that people want it all. Want quality, want value, want consistent, want delivery time that's fast, and we want the product that they want, which changes from 1 month to another month. And therefore you have to provide that and then get ready to provide the new thing that might be happening next month.
Okay, how important is market share? And how important is market share right at the beginning so that people get used to your platform and not Amazon's?
Market share is very important, and at the beginning you have to be aggressive and you have to probably provide the best service ever. You will be cutting prices as usual because we see it. It's a live competition. There's nothing wrong with that. But the good thing is that the market's big enough. 2 players can come in. But imagine if you do business in UK and there is only one operator. How fair is that to your family?
But isn't there only Amazon here?
Well, there are many other players, I think, in UK as well. I prefer that more than one player in a market. And in the Middle East, there will be more than one player and will be one of the major players in the market.
Up next, we talk the leadership skills it takes to create both the world's largest mall and the tallest building in the world. More with Mohammed Alibar next. MR Properties has grown more than threefold since 2011 and expanded heavily in the Middle East and North Africa despite political instability in the region. So what kind of leadership does it take to shepherd a global company through turbulent times? Well, Mohammed Alibar, chairman and founder of MR Properties, is here. What kind of leader are you? Throughout the program, we were talking about encouraging your leaders, your regional leaders, and also your portfolio managers to be aggressive. Do they always need to be on their toes?
Well, I think, number one, they have to be relevant because the change that's taking place in the world. So are you relevant? And the other thing I like is that I think we all have to believe in the reset. Are we doing this upgrade? Are we upgrading every 1 month? Because there's so much happening. And do we really act? I mean, that's, so we have to be relevant, we have to act, we have to have discipline, we have to believe in the best people, and we have to take care of our society. These are things that these are the elements that I really depend on to manage my business.
Okay, but what does it mean being relevant? Because in more traditional times, you could ask a customer what they wanted, and you're saying, okay, I'm relevant. But now the change of pace is so fast. Well,
relevant is that, are you watching social media daily? What's going on with your customer? And what's going on with your business? There's no more, I'll do a research and I'll wait 30 days. How alert are you? And how alert about how your customer feel, or alert what's going on to the industry, what's going on with politics, what's going on with the economy, what's going on in new tools of management, how fast can you go? So I think, are you awake?
What do you need to be awake for more? Is it for your clients, or is it politics, or is it how your business interests are going?
Well, it's about my customer, number one, my people, number two, the society, what's going on in politics, what might happen to interest rate. You almost have to have all that construction risk in my business, what's going on in technology, what's going on in digital. You almost have to be alert of all this but number one, people. And then you have to make sure that you share with them this environment, and are they fit in this environment?
So what does that mean? What do you see your role? Are you putting the fire under your manager's feet to kind of keep them going, or do you micromanage?
I don't think I micromanage, but there's a situation where I do have to go and micromanage, and I think that's we should be able to go down in case we want to. And remember, I came from my mom's kitchen. I used to work in my mom's kitchen, and when we were all 13 kids living in one room, so I know how to do that. So I can pull back and be the chairman of the organization. But if there's need to move in, I can comfortably move in. But I have reasonably good qualified people with me. But I really think that I'm the target creator. I'm the guy who does the monthly performance reviews. I'm the guy who push the limits. I want people to work hard because I think we as human beings, our productivity is still low.
I mean, you spend a lot of time in property because that's where you came from. That was the first company. Sure. But what excites you the most in all the others that you're doing? So hospitality, retail, e-commerce.
I would say e-commerce excites me a lot because when I look at how the digital world is changing our lives, I come back to my real estate business and I say, maybe this office is null and void. Maybe this is all not required anymore. But also, if you look at the digital guys and you see how fast they work, or the process they use, or the age of people in these offices. Therefore, I really believe that the younger generation are running the world, and they run it extremely well. So much learning in the digital side of the e-commerce. But I think my investment in MEVP, which is a private equity firm that specializes only in digital and technology in the Middle East with almost 80 ventures, that's amazing learning about what's going on in the Middle East as well, and the industry that are about to come.
Do you focus a lot on diversity for your companies? Is that important?
Yes, very important, very important. And I think it's happening naturally. I mean, we don't even have to do it anymore. It's just naturally. That's how.
So, do you have metrics?
We have metrics. We have KPIs for that. But as I said, it's so nice that it's really embodied in the organization. It's happening automatically, and I like that.
Do you think it will increase with time, or are you going to see more female workers?
Well, the female workers are really taking charge. I mean, if you look at the people who run my organization, most of our organization, I would say most of our organization, our food boys have to have more of that. But look at our government. highest percentage of senior people in government anywhere in the world.
Mohammed Alabar, thank you so much for joining us. He is, of course, the chairman and founder of MR Properties.
Thank you so much.
Thank you.
Thanks.
Europe's next big deadline, the General Data Protection Regulation, known as GDPR, goes into effect next month. How significant will it be for business? MiFID II back in focus. We talk how compliance has been in the first quarter since the law went live. And the Dodd-Frank debate begins again. How many changes will be made in Congress? We get the latest from Washington. Welcome to Bloomberg Markets Rules and Returns. I'm Naira Chehich in London. Rules and Returns is the show where we delve into the regulatory challenges and opportunities for financial markets around the globe. But first, let's get a roundup of this week's news on financial regulation. Here's Sebastian Salek. Seb.
Naira, European Commission Vice President Valdis Dombrovskis says the EU should not participate in the trade spat between the US and China. But he says the bloc could leverage its role as the world's largest market to uphold the rules of international trade. He spoke to Bloomberg at the Ambrosetti workshop in Chernobyl.
It's not so much about taking sides, it's about respecting internationally agreed rules and trade disputes. There are always trade disputes. If there are trade disputes, to solve them within WTO.
Telecom Italia's board has said it'll take every legal action necessary to block activist investor Elliott Management from pushing ahead with its own slate of directors at the company's next shareholder meeting. Telecom Italia's second biggest shareholder after Vivendi wants to replace 6 Vivendi-backed directors at Italy's former phone monopoly with its own candidates at the company's AGM set for April the 24th. Telecom Italia criticised its auditor's decision, saying that the vote should go ahead. The European Central Bank is considering a proposal that would make it easier to help banks being rescued from insolvency. The plan would let the ECB inject cash into viable parts of a lender that has spun off a failing financial institution, the so-called good bank. That's according to a confidential document obtained by Bloomberg News. And China's president has reiterated pledges to open sectors from banking to auto manufacturing. Xi Jinping made the comments in a speech that also warned against returning to a, quote, Cold War mentality amid trade disputes with US counterpart Donald Trump.
I am confident that with these efforts, China's financial sector will be much more competitive. Our capital market will continue to enjoy healthy development. The building of a system of modern industries will be accelerated. Our market environment will be greatly improved, and intellectual property rights will be effectively protected. In short, China will enter a new phase of opening up.
And Goldman Sachs Group is taking on the exchanges to win the business of fund managers eager to keep their stock trades hidden in the era of MiFID II price transparency. The bank has set up a so-called periodic auction service that matched its first trades on March the 21st, allowing investors to buy and sell shares without tipping their hand to the rest of the market. And that's your regulation news roundup. Naira.
Thanks so much, Seb. Now, the next big post-MiFID II deadline is drawing closer. The European Union's General Data Protection Regulation, known as GDPR, a bit of a mouthful, expands individuals' rights to control how their data is used. It also sets new standards for any holder of sensitive data, from Amazon to your local government council. The revamped rules take effect on May 25th and will dramatically impact how companies collect, store and use data. Joining us now is Naomi Bowman, Managing Director of Financial Services at BRG. Naomi, great to have you with us, and thank you for giving us some of your time. So the GDPR rules apply to any company globally that collects the personal data of EU residents. That's a lot of companies. How are organisations doing so far in terms of complying a month away?
It's a great question. I think that the first thing to say is, particularly when you consider from a UK standpoint, we're actually talking about a revamp of pre-existing law. So we have currently we are in the UK under the 1998 Data Privacy Protection Act. And therefore, actually what this is a revamp of a 20-year-old policy. Organisations have had the past 2 years to look at the impact and assess the impact of GDPR on their own organisations.
Yeah.
And so therefore, this isn't something new, and this isn't something that should come as a shock, particularly in an environment where technology has just transformed the way that we live and the way that our organisations function.
So in financial services, for example, what sort of changes will need to be made with the advent of GDPR?
So I think the key things are, particularly in the larger corporates, really what this is looking for is making sure that organisations are clearly documenting and clearly have procedures for the storage and retention of customer data. This is, when we talk about GDPR, we talk about individual data. We're talking about personal information and sensitive information. Personal information can be anything that can identify an individual. It might be their date of birth, it might be their address, it might be their email address. Sensitive information can be anything from an individual's political or religious beliefs that could be potentially their sexual orientation. It could be something that, if was leaked, would be particularly sensitive for that individual.
Right.
And so organisations really already should have had policies and procedures in place around the storage of this information. But what GDPR is asking for is a European-wide and EU-wide approach to the sensitive storage of this data.
So in terms of extra costs then, whether they come in terms of dollars spent, time spent, headcount, firms and organisations, a survey of Fortune 500 firms shows they are on average setting aside $1 million for the added tech costs. Is this in line with your clients and the people you work with?
Yes, I think that is a sensible estimate. I think that the impact of GDPR and the cost of regulation is somewhat less than some of the other regulations that we've recently seen. Over the last 5 years, for example, I helped organisations understand the impact of FATCA, the Foreign Account Tax Compliance Act, on particularly on financial institutions. And by and large, that kind of regulation has a much greater financial and operational impact on organisations. I see GDPR as actually a good thing and a necessary thing, a very sensible piece of regulation that organisations should be able to implement in a relatively pragmatic way.
What are the costs of not complying then? Isn't it as much as 4% of global annual revenue?
Correct. So the